Good day and welcome to the Supercom Ltd. Fourth Quarter and Year 2014 Results Conference Call. Today's conference is being recorded. At this time, I would like to turn the conference over to Robert Fink from Hayden IR. Please go ahead, sir.
Thank you, and good morning, everyone. Thank you for joining us today for Supercom's Fourth Quarter and Full Year 2014 Earnings Results Call. Joining us on the line are Aria Trebelsi, President and Chief Executive Officer, Simona Green, Chief Financial Officer, and Ordon Trebelsi, President of Supercom North America. Our press release detailing the results crossed the wires at approximately 9:15 a.m. Eastern Time this morning. Following comments by management, we will open up the floor for questions. In addition, we encourage you to visit the company's website for further information regarding solutions, service, and products. Before we start, I'd like to point out that this conference call may contain certain projections or other forward-looking statements regarding future events or future performance of the company. These statements are only predictions, and Supercom cannot guarantee that they will in fact occur. Supercom does not assume any obligation to update that information. Actual events or results may differ materially from those projected, including as a result of changing market trends, reduced demand, and the competitive nature of the security system industry, or due to risks identified by the documents filed by the company with the Security and Exchange Commission. In addition, following the company's disclosure of certain non-GAAP financial metrics in today's earnings release, these non-GAAP financial metrics will be discussed during this call. Such non-GAAP metrics are used by management to make strategic decisions, forecast future results, and evaluate the company's current performance. Management believes that the presentation of these non-GAAP figures help investors understand and assess the company's ongoing core operations and prospects for the future. Unless otherwise stated, it should be assumed that the financials discussed in this conference call will be on a non-GAAP basis. A full reconciliation of non-GAAP to GAAP financial metrics is included in today's press release. At this time, I'd like to turn the call over to Ordon. Ordon, the call is yours.
Thank you, Rob. Good morning, everyone. I'd like to welcome you to our fourth quarter and full year 2014 earnings conference call. I'm pleased to report that during the fourth quarter and throughout 2014, we continue to execute on our long-term growth strategy. It has been our goal to strengthen and expand our EID business in order to accelerate growth while developing two additional divisions. The end-to-end IoT division, which leverages our legacy RFID technology into an innovative, fully connected suite of solutions, and the MPay Secure Financial Services division, which offers a new suite of secure mobile payment solutions which work on any mobile phone and point of sale to allow mobile payments ubiquity. I'd like to begin my prepared remarks with a high-level overview of the full year and fourth quarter results. Then I'll turn the call over to Simona Green, our CFO, who will review the financial results for the quarter and year ended December 31, 2014. Following Simona's review, Aria will provide a closing statement and open the floor for questions. The overall EID market continues to grow, and the addressable market that we have previously discussed and focused on, developing countries and international tenders between $10 million and $200 million, represent a $1.5 billion per year segment of the general $12 billion EID market. This segment is experiencing very rapid growth, stronger than what we are seeing in the general market and segments representing more developed countries. In 2014, we won more than $60 million in new EID contracts and generated $6.3 million in operational cash flow. The strategic benefits resulting from the acquisition of an EID competitor, the Smart ID division from OTI, in late 2013 has exceeded our expectations by far. In addition to significant cost synergies and added scale, which we anticipated, the acquisition is bolstering our ability to win business around the world. The acquisition diversified our source of revenues and offered us new access to great potential markets in Africa, Asia, and South and Central America. And it has provided us local subsidiaries to offer pre- and post-sale support operations. It also brought in some great employees, and the investments we made in our sales organization over the last 15 months are paying dividends in driving improved sales execution today. As we have explained on previous calls, We serve customers in varying markets and environments around the world. Hence, each project has some different attributes, but typically, the majority of our revenue from a new project deployment is recognized in the first 9 months of the implementation phase following the announcement of the new contract. Then, over the course of the next 9 to 15 months, we will recognize typically the vast majority of the contract balance before getting into the steady state recurring revenues. After the project implementation is completed and our customer actually begins delivering IDs to their citizen, we typically start receiving recurring revenues from that contract that include maintenance, licensing, and consumables. On average, we will generate between 20 and 30% of the total deployment contract value as recurring revenue every year. This is, of course, in addition to the initial stated deployment contract amount, which is recognized during the implementation and deployment phase. I'd also like to point out that the margins during the implementation tend to be in the range of 50 to 70% gross margins, which is slightly lower than the margins of our recurring business that has already reached a steady state. As we continue to win more new government customers, our base of recurring revenue will grow. And with it, so will our margins. In the EID division, we plan to grow organically by adding new EID government customers and by offering more services to each of these existing customers. The beauty about our platform is that it is agile and highly scalable. So for our customers, it's very easy to add an additional module or program to an existing deployment, which can serve as an additional revenue center for our government clients and increase their ROI. The progress made during 2014 bolsters our confidence in the EID business as we head into 2015. We continue to be encouraged by the number, quality, and size of opportunities we have in our sales pipeline, and global macroeconomic conditions have not materially impacted the overall market. In fact, we are seeing an increase in RFPs in our market segment. During 2014, we enhanced the efficiency of our tender response process and significantly increased our bidding capacity from one proposal every 1 to 2 months up to 3 proposals per month. As we implement more successful projects around the world, we're getting better intelligence from the field, which helps us track more and better serve appropriate proposals. In addition, as a result of successful integration of Supercom and the Smart ID division, we are now well positioned to work on larger tenders, which as 2 standalone businesses we were not previously positioned to handle. Leading into and during the fourth quarter of 2014, we began actively bidding on even larger tenders in markets where we actively see significant opportunities. Today, we have a large amount of open proposals in various stages in many countries around the globe, and we believe we are well positioned to exceed our stated goal to secure at least 2 to 3 contracts in 2015. Based on our success in 2014 and our current visibility, we are optimistic about Supercom's future in EID and believe that we have a significant opportunity in 2015 and 2016 to begin winning larger tenders at a more rapid pace than full year 2014. In addition to the opportunities we see in our EID division, we are increasingly optimistic about the opportunities in our M2M and MPay divisions. By leveraging our existing expertise, our robust, innovative solutions in these 2 rapidly growing segments represent a significant upside opportunity for Supercom. As we have discussed on previous calls, Supercom has invested many years in developing proprietary active RFID technology for the machine-to-machine or IoT space, technology that has unique capabilities. We've been selling these components for over 7 years to customers around the world. In 2014, we have shifted our business model to focus on a full connected solution offering rather than simple component sale. This leverages our brand and decades of experience in providing full turnkey IT solutions in the EID space and allows us to generate much higher margins and recurring revenues also in the M2M space. A component now can also seamlessly communicate with smartphones so that it easily makes other devices smarter. And together with the inherent technological advantages that we offer, we plan to disrupt a few carefully chosen verticals. In electronic monitoring to public safety segment, we hired 2 new senior sales leaders, one to cover the U.S. and Americas, and the other to oversee sales in Europe and Asia. Both senior hires are industry veterans with long distinguished track records of success in their respective markets. We began marketing our inherent Pure Security electronic monitoring suite to customers in the U.S. in Q4 2014, and we launched the suite in Europe, South America, and Africa as well in Q4 2014. We have been in discussions with several potential customers in the U.S., Europe, and Asia who have issued tenders that we have actively responded to in the public safety segment. These tenders range in size from 100 units to tens of thousands of units, and each unit per year you can receive between $1,000 and $2,000 or up to $3,000, and we believe we are well positioned to secure new contract wins in 2015. Turning now to MPay, our financial secure solutions. Earlier this year, we were approached by some of our customers in emerging countries to offer a payment capability for unbanked customers and consumers. Research indicates that 2.5 billion people globally are unbanked, but over 1 billion of those people have access to mobile phones. In response, we presented our MPay mobile money and mobile payment suite at several of the largest payment conferences in the world. In November, we launched our suite of solutions simultaneously at the Money 2020 show in Las Vegas and at the Card Secure Connections conference in Paris. Earlier this month, we showcased our products at the Mobile World Congress in Barcelona, and it all received overwhelming interest from partners and customers around the world. For Supercom, our early penetration in capturing even a small portion of this fast-growing market not only represents a huge and long-term growth opportunity, but also greatly exemplifies how we're using technology innovation to provide a nice value to a rapidly growing customer base. We are most likely to seek to partner with banks, governments, and merchants and change life insurance fees as well as transaction fees charge. Not only are we executing on our business plan, we are also making strides to assemble a corporate team that will propel Supercom to the next level. We have been adding to our sales force, focusing on systematically improving our process. Operationally, we remain vigilantly focused on efficiencies, which has been part of our DNA since the beginning. In doing so, we're able to utilize revenue growth to increase our margins, invest more in R&D, and generate operational cash flows of $6.3 million in 2014, and a strong amount of $4.7 million in the fourth quarter of 2014. Now, I'll turn the call to Simona Green, our CFO, for an overview of the fourth quarter and full year financial results. Simona?
Thank you, Ordan. I will now walk you through our financial results for the fourth quarter and full year 2014, compared year over year with the fourth quarter and full year 2013. Thereafter, we'll be happy to take your questions. Revenues for the fourth quarter of 2014 were $8.2 million, compared to fourth quarter 2013 revenues of $1.9 million. Revenues for the full year 2014 were about $30 million compared to full year 2013 revenues of $8.8 million. I am presenting the rest of the financial results on a non-GAAP basis, which excludes the non-cash income tax benefit we had in 2013, other no-related expenses, as well as amortization of software and IP and customer contracts to intangible assets, which were created as a result of the acquisition of the Smart ID division in December 2013. For a full consolidation from GAAP to non-GAAP numbers, you can refer to the press release we issued this morning. Our gross margin in the fourth quarter of 2014 was 71%, an increase over the 65.4% in the fourth quarter of last year, and slightly below the 76% margin in the third quarter of 2014 due to the new contract implementation. On a full year basis, our gross margin for 2014 was 75% compared to 78% for the full year 2013. Please bear in mind that the shift in gross margin relating to the proportion of the revenue, it is recurring, and the portion which is derived from new contracts. The recurring element tends to be at a very high gross margin, while new contracts and the initial installation tend to be lower gross margins. On a normalized basis, we expect our gross margins to trend around the 70% mark. Operating income in the fourth quarter of 2014 was $2.1 million or 262% of revenues, compared to an operating income of $0.2 million last year and a decrease from $4.1 million in the third quarter of 2014. For the full year 2014, operating income was $10.7 million, or 36% of revenue, compared to $1.7 million, or 90% for all of 2013 year. Net income was $2.3 million for the fourth quarter of 2014, compared to $0.3 million in the fourth quarter of last year. For the year 2014, net income was $10.6 million, compared to $1.7 million for the full year 2013. Earnings per share were 0.17 in the fourth quarter of 2014 versus 0.3 in the fourth quarter of 2013 and 0.30 in the third quarter of 2014. Earnings per share for the full year 2014 were 0.81 compared to 0.21 for the full year 2013. EBITDA for the fourth quarter of 2014 was $2.3 million compared to EBITDA of $0.3 million in the fourth quarter of last year and $4.2 million in the third quarter of 2014. For the full year 2014, EBITDA was $11 million compared to $2 million for all of 2013. Turning to the balance sheet, at the end of the fourth quarter, we had increased our cash and cash equivalents by over $2.1 million compared to December 31, 2013. Our cash flow from operation was $4.7 million during the fourth quarter and $6.3 million for the full year. Trade receivables continue to remain at high level by the end of the quarter, reflecting the significant revenue increase during the quarter. We increased our working capital to $16 million at the end of December versus $4 million at the end of 2013. Shareholders' equity increased to $28 million at the end of the fourth quarter, up from $19 million at the end of 2013. During the quarter, there were several non-recurring charges that impacted the profitability of the company. Most notably, we wrote off $1.2 million in bad debt expense related to an unpaid obligation from a project in 2009. Supercom no longer does business with this customer, and this legacy project has not been part of our business in the last 3 years. Efforts to collect this debt were unsuccessful, and we determined that timing was appropriate to write this bad debt in this quarter. We decreased our deferred tax asset correspondence with our remaining non-operating loss carryforwards. Supercom has approximately $23 million in NOLs remaining on a consolidated basis. As a reminder, the tax expense is a non-cash transaction. Going forward, we'll continue to evaluate those NOLs and analyze the establishment of additional tax assets. And third, we finalized the purchase price assets allocation related to Smart ID acquisition by the end of 2014. Under GAAP accounting, once the acquisition was complete, we reviewed the purchase price allocation related to goodwill and intangible assets and retroactively adjusted the allocations to more accurately match conditions. This was strictly a balance sheet change only. With that, I conclude the financial summary. And now I will hand it over to Aryeh.
Thank you, Simona. Before we open the call for questions, I would like to reiterate our outlook for the year 2015. For the full year ended December 31st, 2015, we expect revenue growth to exceed 40%, or $42 million on a year-over-year basis. Additionally, we anticipate non-GAAP EPS for the year 2015 to exceed $1.20 per share. As Rodan already indicated earlier on the call, we are optimistic about Supercom's future, and based on our success in 2014 and our current visibility going, we are ready for a strong 2015. I would like now to open the call for a question. Operator?
Thank you. If you would like to ask a question, please signal by pressing star 1 on your telephone keypad. If you're using a speakerphone, please make sure your mute function is turned off to allow your signal to reach our equipment. Again, press star 1 to ask a question, and we'll pause for just a moment to allow everyone an opportunity to signal for questions. And we'll take our first question from Salik Khan with Imperial Capital.
You guys have been incredibly successful when it comes to doing well in the emerging markets, and having you here in the United States, particularly here in the New York area, obviously is a great benefit for your company. Can you talk a little bit about the strategy and what that essentially looks like for your growth here in the United States?
Yeah, Dan, I think it's a great question for you.
Okay. So we have three different segment divisions that we focus on in EID, M2M, and MPay. EID, we currently focus mainly on the developing countries, and that's where a lot of our track record and experience is. It's also the segment that's growing very rapidly in the general EID market. It's not to say that our capabilities would not allow us to also do projects in the U.S. or other developed countries. It's just that the competitive pressures and landscape is different, so that is less of our current focus. But in the M2M and IoT and the payments division, the USA, along with South America and other areas of Europe and Asia, have a competitive landscape which is very well suited for our capabilities and our offerings, and we are looking into these markets as well. Specifically in the public safety space, we brought a veteran, Jason Gilbert, who has extensive experience in selling the tracking of offender solutions in the United States, and he's overlooking the strategy of sales through this region.
The other kind of building upon that same question is that you guys have had and you kind of mentioned with the hire of Jason as well, you've had a pretty successful past of hiring from your competitors, hiring away from your competitors, actually. What essentially does the training look like for your sales reps? And at the exact same time, is there a verticalization process that your sales force is employing to make sure that they win bigger clients and more clients on an ongoing basis?
Could you repeat the first part? What is the what for the sales rep? I apologize. I can't hear you well.
Yeah, you guys have been pretty successful in hiring away from your competitors. What does the training look like for the sales reps, and also from either an internal mandate that you might have or the opportunities that your sales reps see? Is there some sort of vertical that they're approaching first and then segmenting it and going after the second and third one?
Okay, first of all, I mean, in general, we're not hiring people from our competitor. We're looking for great people for our company that can join and derive further with our company. And second, we are already allocated 3 vertical markets that we believe that we have a very good solution for them, and we are competing with them. We are not going to get in this call into more strategy or sales strategy, and I would like to leave it as is.
Sure. And the other question I have for you guys is two ones. One of them being is, with the increase in the RFPs that you guys are seeing, and particularly also in the bidding process from your end, what does your win rate look like when you actually do bid on an RFP, if you're able to kind of talk about that?
In general, as we mentioned earlier, we believe that our winning rate is growing from year to year, and we expect that year 2015 will have at least 2 to 3 winning for our open proposal.
Thank you. And the last question I had was, particularly in regards to the super payment offerings that you guys have. Clearly, there's a huge need for this in the marketplace, particularly as we look at the increase in the information of things and the IoT space. What is your response to those people that are saying, why would an end user not use something like an Apple Pay or a Google Pay, and why go with a solution like yours?
Oh, Dan, I think it's again a great question.
Yes. That's a great question. There are many mobile payment solutions. You've noted a few, such as Apple Pay, which works well if you have iOS 6 and iPhone 6 with the NFC capability, and you have NFC readers around the region where you work. The problem with that, like other solutions, is that it requires NFC hardware, both on the phone and on the point of sale. And currently in the world, it's hard to find regions where everyone has NFC on their phones and all the point of sale support that. So that's a big hindrance to the development of mobile payments. Our solution, in a different way, allows mobile payments for any single type of mobile phone. You don't need any NFC hardware or any additional special hardware. It works on the 2G phones, the feature phones, as well as the iPhones and the Android phones. And On the other side, it also works on all the point of sale. So if it's Verifone or Ingenico or a tablet or a smartphone, it will support our SuperPay technology. So by allowing a solution through software which works on all mobile phones and all point of sales, we can go to any region around the world and offer mobile payment ubiquity. Because now they can offer something that any user and any merchant can use, and there's no hindrance in terms of hardware and a lack of capability to support the technology.
Hey, thanks for answering the questions.
Thank you.
We'll take our next question from Brian Abrams with Lazarus.
Hi, guys. Let me start with just major contracts. I know the last major new contract win, I think, was back in August. Can you talk about the sales pipeline a little bit more? And are you discouraged that the company hasn't been able to close some major new contracts since August? And if so, what do the months or quarters ahead look like?
Okay. Thank you, Brian. First of all, as we said, I think the last quarter, we increased the threshold for announcement and for contracts that are below $7 million. We're not announcing them. This changed from what we've done in the past. Right now, we have a few large proposals out there. We were very close to have a large contract awarded in November, December, which we believe was just a delay. And we believe that it will be somehow confirmed and delivered in the last 90 days, but we are ready for that with our equipment and software. And right now, as I look at our pipeline proposal and opportunity, it's just amazing. And we see a large amount of opportunity in the AD, in the M2M, and also in the MP. So very excited about the opportunity in all these three vertical markets. As you know, also we added the cybersecurity capability during the first quarter of 2015. So when we say and we reiterate that we believe that we have a great year also for the year 2015, which over $42 million worth of revenue and 1.2 EPS, you can be quite confident that we have all the information in hand to support these numbers with revenue and margin. So I believe that in the near future we'll be able to announce some contracts that are larger than the $7 million threshold and win for the market.
Great. That's helpful. And to your point on the outlook, the guidance obviously is encouraging. I assume it's on the conservative side of things. Can you give us a sense for what the bull case might be? What is the upside if you exceed expectations?
First of all, as you know, our market, because there are very large proposals out there that some of them exceed $100 million, so the upside can be huge. I mean, if our company will be awarded one of these large contracts, our revenue can double from the number that we just expected. Now, we cannot talk about a higher number, but if we win one of those contracts, the numbers are going to be completely different, both in revenue and in our EPS numbers. So we are very optimistic also on the upside.
Yes. It's important to say that we are progressing. Sorry, just a small thing to add on. We are progressing well in large and small contracts. In many ways, we see the same level of difficulty in winning either. So we are progressing in the tenders very well, and it gives us a lot of belief that some of these big ones could be a nice surprise as well.
I think it's important to say also that the fact that we have a broader ability both in the MPay, cybersecurity, and M2M together with the ID helping each other, and we are right now where we contact government or other public agency, we have more what to offer to our customers, and it's increasing our proposal or opportunity, increasing our probability of winning new contracts.
Great. And in terms of timing, do you have an idea of when you expect these, whether new contracts or new businesses, to hit or ramp up, or is it something that could just happen any time and it's hard to predict?
You know, when you deal with governmental agency and when you deal with some of the public, it's time for them. They have their own time to make the decision. Also, sometimes take longer, but I will not be surprised that if we'll have an award in the next 4 weeks or even quicker than that. So I really would like more to concentrate on a year revenue, or look at year over year, because it may be a fluctuation on quarters, but still we may be announcing a large contract in a few weeks if it would be awarded, and there's not a low probability for that.
Okay, great. Thanks, guys. We'll look forward to the year ahead.
Thank you.
We'll take our next question from Josh Nichols with B. Riley.
Yeah, hi, everyone. So organic growth has been incredibly strong sequentially for the first 3 quarters, but Q4 was the first sequential decrease, although still quite strong year over year. Given that there hasn't been any contract awards and we're pretty much through March, are we looking at a Q1 that's probably flat to possibly down as well on the top line revenue, although still up year over year?
As I said, in general, we're not providing guidance for a quarter. We have provided for the year. So I really would like to remain with our policy and not talk about quarterly revenue or growth.
Okay, no problem.
I'd like to say generally, though, that when we deploy the contract, there's different phases of the contract, and we recognize revenues based on the milestones and the progress that we've had in those quarters. It's hard to specify what happens each quarter. So in Q4, it could have been more or less, and it has no impact on the actual deployment of the project. It's just what falls into that deadline. So we like to look more at an annual basis when talking about revenues and project deployment recognitions.
But as I mentioned earlier to Brian, our fourth quarter could have been a $13 or $14 million worth of revenue if just the contract that we're ready to be awarded was awarded on time. We're ready for that. So the numbers can shift from a quarter to the other, and I will not be surprised if one quarter is going to be much higher numbers than the quarter in the year 2014. So really, I would like our investors to look at us more on a yearly basis, which really more reflecting our business rather than on a quarterly fluctuation business.
And then, let's see, looking here, as I'm going to say, that looking at the organic growth and the guidance, so if there's $25 million built into revenue from contracts won in 2014 into guidance for 2015, and some recurring revenue as well, doesn't leave a whole lot. There's not a lot of additional revenue guidance in there for 2 or 3 contract wins. As I said,
you are right with your analysis, and we are, as I said earlier, conservative on the number. And if it's going to be new contract, the number is going to be higher.
And then I was looking here at the future earnout payments. Looks like those have changed recently a bit, and I was wondering what exactly has to happen to hit those milestones where those earnouts will be paid.
In general, what we do with the earnout is really a percentage out of revenue related to a contract opportunity being with transfer from OTI business. And the earnout expectation that you see there is some of the calculation of what we expect from revenue point of view that are related to the OTI Smart Edge division.
And last question for me is, I see there's a lot of restricted cash, like a bit over $5 million now.
Right.
Unrestricted cash is a bit under $5 million as well. And I was wondering, any guidance on what size contract the companies would be able to roll out given its current cash situation?
Right now, in general, I don't think there is a limit there. In general, when we get a large contract, there is a part of that being as a cash in advance from customers that allows to have a positive cash flow on the contract. So we have enough working capital right now, both in cash and other, to support even $100 million worth of contract.
And then, Simona, real quick, what exactly is the restricted cash balance increase for?
The receipted bank cash is exactly the amount that we receive in advance from a customer and are related to some guarantees, and they are being they are being released to free cash upon the completion of the milestone on the project.
Okay, so it's similar to like a deferred revenue, but
yeah, I can say that after the date of the financial part of this amount was already released.
Okay, thank you.
You're welcome. Bye, George.
Bye.
And we'll take our next question from Bob Schnell with Doherty.
Yeah, the question was just asked around Q4 revenues being down from Q3, and I thought I heard the answer somewhat around a contract that you had been awarded that was pushed out that caused revenues to be slightly less than expectations. Is that accurate?
I know, again, the word expectation is your word. In general, as I say, we are always pushing to have growth both on a yearly basis and a quarter, but I'd say we're very close to a point that the fourth quarter would show a $14 million revenue instead of the numbers that you have there. So we may see these numbers in the year 2015.
No, I guess the expectations, I mean the estimates that were out there for your company.
Can you please repeat about the estimation?
When I said expectations, I was referring to the earnings estimates and revenue estimates that were, published by the analysts that follow the company.
We are not referring to analyst expectation and stuff like this. We have we have our guidelines, and right now we cannot refer to any analyst expectation.
That's fair. In Q4, for revenues to be down from Q3, given the recurring nature of a lot of your contracts and the large awards that you had announced earlier in the year, can you help me understand how how Q4 then played out from a revenue perspective?
I can answer this one. There's a big part of our revenues which is recurring, but because we're in deployment of two large projects, there's also a big part which is deployment, and there's many milestones in deployment. And some milestones take longer and some milestones are shorter. If we're working on a large milestone and it's not finished by the end of the quarter, we can't recognize the revenues for it. So then it just moves from quarters to quarters.
Okay.
That's why these things can happen a lot.
Okay. I appreciate it. Thank you.
Thank you.
We'll take our next question from John Rolfe with Argan Capital.
Hey, guys. It seems like folks are a number of folks are struggling a bit with trying to figure out how contract announced revenues flow into the quarterly top line, quarter to quarter here. So let me try it one other way. But between February and August of 2014, you announced a total of $54.5 million of new contract wins. And you've given some broad guidance, including on this call, regarding how that typically flows into revenue. And I think the number you gave was 75% or 50% within the first 9 months, something like that.
Sorry. The majority in the first 9 months. The majority in the first 9 months of the deployment. Yes.
So if I look at that $54.5 million that was announced of new contract wins that were announced in 2014, can you tell me how much of that $54.5 million in new contracts was included in the roughly $30 million of revenues that you announced for the full year of 2014?
We don't have the exact calculation here, but I would say that probably half of it is already in the year 2015, and going forward in the $5 million.
Let me clarify. The numbers that we did share from that, not from the 54, but from the full 60 million, 25 million is to be recognized in 2015, at least, when we gave our preliminary projection. The remainder of that, a large portion, was in 14, and there are some residuals which will go into 16 and forward.
Okay, so just so I have that right, of the 60 million total, how much is going to be in 2015? 25?
25 million in the first 9 months. In the first 9 months of 2015.
Okay, great. All right, thanks very much.
Thank you.
We'll take our next question from Walter Ramsley with Walrus Partners.
Oh, thanks very much. In the fourth quarter, it looks like there were $3 million in orders. Was that from an existing contract or a new one?
From existing customer.
Okay. The company apparently, focuses on Asia, Africa, and South America. Could you provide a revenue breakdown as to what those three represented in 2014?
Okay. We will have all these breakdown in our 20F to be filed shortly. Where I'll say that the majority is from Africa and South America. Okay. The $42 million that the guidance represents for the current year. You just said that 25 of that is from the existing implementation, I guess, those contracts. So the other 17, is that from new contracts that you're expecting, or is that from something else? Part of this is recurring revenue, and the other are from new contracts. Mainly recurring revenue and repeated customer contracts. Okay. And just finally, I guess, the currency markets and the commodity markets on a macro level have been extremely volatile, essentially starting in August when you sign those big contracts. And, there's been an apparent correlation anyway between the lack of new business and all of this economic uncertainty. Do you think that's had an impact on your customers, or? I would say that in general we're doing with government and product which is critical service to government, but there are some cases there are delays in contract award due to some turbulence, or for example countries that were heavily based on oil, for example, in some African countries or other places. So, but in general, it's only a delay for a quarter or two because those services are required and essential for government. So we do not see it's mainly a delay. We don't see it as a reduction in revenue for the next quarter.
So just to follow up on that, do you think the customers are taking kind of a wait-and-see attitude to see how the worldwide economy develops, or? No, I think what are they thinking, in your opinion?
No, what is really happening is because this service, let's say an ID or passport in the Senate service, the government need this kind of service. They cannot really have a stoppage on generating this kind of idea or documentation. But so when they are talking about new contracts, for example, sometimes this kind of economy may delay in a quarter or two their award or their decision to make an award. But at the end of the day, they cannot really stop or cancel this kind of award because it's required by the government to provide services to their citizens. Also, it's a major income generation for the government.
That's very helpful. Well, anyway, congratulations. Thank you for answering the questions.
Thank you.
And we'll take our next question from John Roginski with Diversified Financial Group.
Hi, and congratulations on a wonderful year. I'd love to see the growth that you put into place, and I love what you do personally. First of all, it seems to me that you're fairly cautious and conservative in your reporting. Would you say that would be a true statement?
Well, I believe so, and especially for our guidance.
Okay, I just wanted to point that out because I'm getting the perception that when you say something, we can take it to the bank, so to speak, and I think that's the way you want it. Especially with, like I said, the guidance going out for 2015. That's important for my next set of observations, and I'm talking from a shareholder's perspective primarily, because I think that's what we're all really looking to see is how is the share going to perform. And obviously, on this news this morning, the shareholders didn't like what they saw for some reason, and I'm trying desperately to discern what that is. But am I incorrect in seeing, okay, there's a 300% year-over-year revenue growth. There's a 500% year-over-year income growth. 50% margin growth year-over-year. 400% non-GAAP earnings growth year-over-year. You've got clear visibility for 2015. You're in a high-growth sector. You're properly positioned to take advantage of that growth section. You seem to be making acquisitions that are wise for your purpose. You have got a minimum growth of 40 to 50% non-GAAP going into 2015. You're relatively debt-free. You've got a high degree of recurring revenue, which should grow. You have a rich cash balance, and you've quadrupled your working capital. You didn't grow quarter over quarter, however. So I'm trying to think of, other than that fact, why the shares are getting hit. Do you have any ideas of what you can see what might be the reason? Is it perhaps a disconnect with shareholders? Is it a weak shareholder base? I'd like to hear your thoughts on that subject.
First of all, you described nicely our performance, and thank you for that. The reasoning why the share is in this level and not another, it's hard for me to say, but I can just repeat what some other people are saying and I believe it has to do with some analyst expectation for the fourth quarter, both in revenue and other, and maybe people were listening to them more than to us, and maybe the others are disappointed. We, as a company, as management, are very happy with the result, and we believe that the performance of the company on the business plan is much better than we anticipated a year ago. We are very excited about the years going forward, both from a product line, revenue, pipeline, and etc. So I can only repeat that we feel great about what we have done. We thank our employee and managers for their great achievement, and we often believe that investors will find out what we all see here in the company, and the share price will reflect our performance.
I'm glad to hear you say that because, again, from a perspective of a shareholder and someone who advises other people on shares, there seems to be a disconnect as far as year-over-year performance is concerned. And I'm wondering how some of the expectations that were set by analysts were developed. I'm wondering, because I heard some rumors at 40 cents plus for Q4, and just from listening personally, I can't imagine how somebody would have come up with that. It seemed to be fairly obvious, at least from the last conference call, that may not be the case. And I'm wondering, who do you see your shareholder base being? Are we developing more relationships with other institutions? What about? Do you guys plan on buying some more shares for yourselves? I know there's a very, very small amount of traded shares, as you have a low float. Do you think that has a lot to do with your volatility, and do you think it might help you in the future? So
I would say that if I would not be in a blackout period, me personally and staff probably I would be buying shares. But on the other, I think Dan can probably talk more about the investor is in close touch with investor, but definitely we are looking for quality investor. We believe that our company is the right one for this kind of investors, and we are aiming to them. And we believe that once all these investment funds will realize what great company we are, you will see a shift there, and probably the share price will reflect it. And Odad, you can probably give some more color about that.
Yes, we have to remember that we just relatively recently came back to the market, returned to NASDAQ capital market, and the business that we're in is in some way slow-moving in terms of new contracts and new deployments. And we had a base of investors which was mixed with retail and institutional, and what we've been working on over the past year together currently with our IR firm Hayden is bringing on more institutional investors, more analyst coverage, and to help the investors out there understand the core of our business and the projections going forward and sort of the outlook. We're very open to talk to investors, and we're happy to help whoever reaches out and speak to them. But our main focus as manager of the company is on execution, and our underlying belief is that as we deliver quarters that are continuously strong and we perform on our business plan, the stock will adjust to its appropriate value, and investors sooner or later, depending on the type of investor, will understand that through the numbers and through the financial results.
And we'll take our next question from Yanis Yuliel.
Yeah. Hi, guys. So my question is a follow-up on the new contracts revenue recognition, a question that was asked before. So we said there were about $50 million of new contracts, and then you mentioned that about half of it will be recognized in 2015. So that means that the other half was recognized in 2014. That's around $25 million. And that doesn't really square off with a full year revenue of $29 million, because I expected that a higher portion of the $29 million relates to recurring revenue. So can you put things in order a little bit here?
First of all,
let me clarify.
25 million is 15.
All right, let me just clarify. Because I think I know what he's talking about. Out of the $50 million, not 60, 25 will be in the first 9 months of 2015. It doesn't mean that the rest is in 2014. Some of the revenues fall into 16 and into the future. There's also the last quarter of 14. I think that's the gap that you're seeing in your calculations.
Oh, okay. So some of it will be probably into 2016. And are you willing to tell how much of it was recognized in 2014?
We haven't shared that number specifically, but if you take the project that only started in August, the deployment alone falls into 2016. So there are revenues in the $60 million which continue and are not only in 14 and 15. And furthermore, we talked about $25 million in the first 9 months. There's still the last quarter, which will have some revenues as well of 15.
15 million, there's some residue of new contract that will be probably moved. It will be given to the first quarter of 2016. And mainly it has to do with warranty or maintenance parts of contracts that are being pushed into 2016.
Sure, thank you. Then another question I had is about the timing of recurring revenues. So how long does it usually happen after you finish the initial deployment? Does it take place immediately after, or is there some time lag between the time of project completion and time of the customer approaches you again and asks for a follow-on orders or some recurring revenue?
It actually starts to happen in an interleaved fashion. As, for example, if we're deploying to branches, the ID capability of printing, as some branches become ready, they start to print ID cards. And as they're printing ID cards, that's already in a recurring steady state. So there's sort of a seamless transition from the project implementation to the recurring revenue as the actual system becomes operational in steps. Doesn't all happen in one day.
Yeah, and for follow-on contracts?
Follow-on contracts? That depends what type of contract it is.
ID and then...
The other models.
If we do more modules, if we did ID, then go to driver's license and passport. That is a process that we've done in the past. It could be throughout the implementation of the first module. It can be after the implementation. It could be in a break in between for a year. It all depends on the needs of the customer and how strong the relationship are with that customer. So it's a variety.
Okay, guys, that's all on my side. Congratulations on a great year, and keep up the good work.
Thank you.
Thank you very much.
We'll take our next question from Tony Polak with Aegis.
Good morning. Could you explain the other expense for doubtful debt of a 2009 project implementation of about $1.1 million?
Yeah. Okay. I would say these are there is a bad debt that we have decided just to zero it, and it has to do with a contract for the year 2009. It has a large amount of debt from this customer, and we were trying over the year to collect it. It nothing has to do with our new business. It's a business that is from the year 2009, and we have to decide. Although there is a nice chance to collect it, we have decided this year just to zero it. It nothing has to do with our account business or any other operation. It's a very
okay.
It's an old project.
Okay.
Tony, it's not part of our. As you know, our core systems are integrated national ID systems, which have to do with printing a core element of identification for the government. And in that case, we have not seen, and the industry rarely sees any bad debt or people that don't pay because the government needs to run the system, they need to print more ID cards and so forth. Once in a while we're supporting our customer, they ask for additional models which aren't systems which have recurring revenue elements. It could be adding security cameras or other elements and so forth. And they're one-off things that we sometimes do to help our customers. This is an example of one of the situations. That's why it has a characteristic which can turn into bad debt, as you've seen here.
Okay. Can you talk about the income tax expense for the 3 months? It shows $1,675,000.
Yeah.
Yes, the tax expense basically was expended in the fourth quarter based on some analysis, but it's referred to the full year earnings, and it's only it's a non-cash expenses, of course. It's only a deduction of the deferred tax asset that was recognized in the fourth quarter of 2013. It's a non-cash expense, as I said before.
So am I right to think that it shouldn't have been put in the fourth quarter? You just didn't put it in previous quarters and had to apply?
No, it depends on the company analysis, and we thought that based on our assumption, we analyzed it regarding the assumption that we'll be able to build more deferred tax assets going forward. And by the end of the year, we decided that for the Israeli part, we'll deduct it to the P&L.
Although we have additional NOL, we have decided to be very conservative this time. We have said during the whole quarter that we are going to analyze our NOL and tax assets at the end of the year again, and we have decided to be more conservative and start to realize some of the tax assets.
Okay. You're projecting earnings, according to my calculations, of $16 million plus next year, and your balance sheet is great. Could you explain why the company hasn't done any buybacks for the company itself, especially since you said that you don't think you need any more cash to bid on contracts?
What you're saying is something that the company is considering right now, because we have a nice cash flow. We don't really need to raise capital right now, and we don't see the need for that. The company at this level are considering a buyback program for the year 2015, and we're probably going to announce a program like this in the next 4 weeks.
Okay. Thank you. Could you tell us exactly how many bids you have out there and the size?
How many what?
How many bids you have out there for contracts?
Yeah. We have it's about out there.
We actually have stepped away from sharing the specific metric of amount of bids because we believe that it's more valuable to understand how progressed you are in the bid and the size of the bid and the simple number of the amount. And in order to not be misleading to investors, we have stopped sharing that specific number.
But I can just mention one important thing. Our pre-sale people are working very hard to try to answer all the large amount of opportunity out there and provide proposals and to our customer around the world. So we are very busy here.
Okay. You talked about in the beginning about 100 units. I'm not sure what that talked about. 100 units to 1,000 plus units of 1,000 to 3,000 per unit. I wasn't understanding what that was.
Those were public safety leg offender tracking units. So it's just in the past we would sell the actual chips to track people. Now we sell a solution, and the solution is priced based on units. And if you're deploying into a county in the U.S. for 100 offenders, you would denote that 100 units. If you deploy something into a full country deployment, you can reach 2,000 units or 10,000 units. So we're looking at a variety of deployments, some small and some large, which would utilize our full solution of the public safety offender tracking. And typically in the market, we see between $1,000 to $3,000 of annual revenue per unit. Sometimes it's even more than that, but that's just a general trend to understand that we're talking about millions of dollars of recurring revenue from these contracts in the end-to-end public safety monitoring space.
Are you actively bidding on contracts for that now, and what does the competition look like in those?
Yeah, we in this market, we believe, and again, based on feedback from our customers around the world, we believe we're among the best solution. Right now, there are more than 15 open proposal tenders around the world, mainly in Asia and Europe, because they're adapting the U.S. system for house arrest and correction programs and others. And right now, we believe that based on the bids that are out there and tenders out there, we are in an excellent position to win some new contracts. What's good about this kind of contracts that are contracts in general for 5 years, and they are almost a cash cow generator, similar to what we have in DID. So we are very optimistic to be awarded some contracts in this market.
Are the margins similar to your existing businesses?
Yes. In this case, I would say that margins are maybe even higher after the initial setup.
Okay. Thank you very much.
Thank you.
We'll take our next question from Kevin Deed with H.C. Wainwright.
Hello, gentlemen. It's Kevin Deedy. Ordan, I was more curious about seasonality, I suppose, in contract bids. I mean, granted, there's tons of discussion about what was going on in EID. I'm curious if there is any noticeable seasonality in the way contracts are awarded, bid and awarded, and their differences in EID, M2M, IoT, and MPay.
There is some seasonality that depends on the different regions of the world. For example, in South America, the 2 months of January, February are summer vacation, and everything slows down significantly. Obviously, in regions where we talk about other holidays or other seasons of the year where the government activity slows down, you just see less announcements. But it varies around the world, and we look at a general sort of diversified bidding environment, so we kind of neutralize much of that out.
Okay. Then
Arya might have some more. Arya might have some more insight on that. Arya?
So I think in general, Dan is right. On the other side of implementation in general, in some of the countries, generating passport and travel the activity is higher in the summer than in the winter. So you may see some fluctuation in consumable and revenue from generating passport. But I think in general, I think we can smooth it out throughout the year.
Are you confident enough to perhaps offer revenue breakdown across EID, M2M, and MPay, maybe toward the latter part of this year, and maybe give us an idea of where you think recurring revenue will fall out as a percentage of total?
In general, we have not done it yet. We have not done it yet, but maybe in the future we'll provide more detail about the breakdown between the division and the geography. Probably you will see most of that in our 20F coming soon.
Oh, very good. Okay, thanks. That's all I had, gentlemen. Thank you.
Thank you.
Thank you very much.
We'll take our next question from Manny Stupakis with the Market Edge.
Hello. I think you kind of already answered my question, but just to be clear, does your current guidance include any of the anticipated contract wins that you have mentioned?
No.
It
not, right? Okay. Well, that's all I had. Thank you very much.
Thank you.
And we'll take our final question from Deborah Fiakis with Crystal Equity.
Thank you for taking my questions. It's Crystal Equity Research. And I wondered if you could tell us a little bit more about the RFPs. You mentioned in your opening remarks that you're seeing more RFP activity, and I wondered if you could tell us what divisions, the EID, is it principally EID business, or is this also in the IoT business?
Okay, I would say that there is both divisions, the M2M and the EID, as a very active and rich bidding process around the world, and we see many bids out there. In many cases, we have to decide just to not bid on some of them because they are either on low level. So there is a lot of activity on both. On the MPay business, we are working in a different way. We are working directly with banks and some other financial groups. So the way we work there is not through bids. It's more in direct connection with the financial groups.
Right, thank you. And also in your opening remarks, you mentioned hiring new marketing personnel. I wondered if you could give us a number of your current employees.
Right now, I think we have about 130 employees.
Okay. And then are you relying principally on the RFP activity and on direct sales to find new business opportunities, or are you also trying to develop a network of, say, strategic partners or marketing partners? Maybe you could just describe a little bit how you're penetrating your various markets.
I'd say it's a difference between the division. On the MPay, we're working more with a joint venture agreement with some other groups, especially with mobile carrier or banks and etc. On the AID, we mainly work with government, and most of the contracts are being generated through tenders, because we are talking about cloud contracts, and government in general will publish tenders there. With the M2M, on the public safety issue, is more, again, because it's governmental or public agency is going through tenders. But on some other part of the M2M, we are working also in some collaboration and with large groups, especially in the retail market.
Okay. And then also I wondered, in January you announced an acquisition of a small company, cybersecurity. I wondered if you could give us an update on the status of that deal in terms of closing and integration, and also comment on whether or not that's included in the $1.20 earnings per share for 2015 that you guided toward.
Okay. First of all, it's not included in the 120. Second is we are in the process of closing the deal. We had some delays in our process, but we are very close, and we believe this is going to be closed in the next 10 days. The CEO of this company is already working with us as the Vice President of Cyber, and we're already working together around the world, both providing a proposal to many governments around the world, together with trying to increase the security of our product and solution. And we're very excited because in many countries, governments are looking for this kind of solution, and they're seeking help in the cybersecurity, both for their e-government platform and some other stuff. So we are very excited with this capability being added to our capability, and we believe that it's going to provide us with a very high competitive edge, as we know that most of our competitors on the other two verticals do not have our capability in the cybersecurity arena.
Okay. And so the technology that they're bringing to the table, you expect that to impact your entire product line, or is it principally for the mobile payments?
No, the entire. It's going to affect our EID platform. It's going to affect our end payment. It's going to affect our M2M, and it's going to be also a direct sales to government and critical infrastructure.
All right. Thank you.
Okay.
And that does conclude today's conference. Thank you for your participation.